Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hotspots in the markets for today, Monday, May 9th. My name is Todd Rich. I am with Nadex. With me, as always, the CEO of Keep Trading Simple, Brian Caprice. We are going to take a look across the board, just did a few different things on what's moving this morning, but really, the synopsis for today is sell, 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 sell. We're a Kramer. It's everything is offered. Uh, Equities all being sold, bonds being sold, crypto being sold, the dollar, the US dollar, seeing weakness. It's really rather interesting. We've got high inflation and people seem to be moving to cash. I find that odd because when you've got high inflation, if you're holding on to cash, we know that it rots underneath you. That is what inflation does. So you don't want to be in cash. However, everything else is being sold. So I'm really kind of curious. It's an odd move, but we will get into those. We'll take a look across the board equities. We'll take a look at the dollar. We'll take a look at crypto. I mean, the Bitcoin is now down around 33,000 again. Uh, Interesting times, given high inflation and expected, and we're going to get a glimpse of some inflation metrics this week. Wednesday CPI, Thursday PPI. So we do have that to look forward to get a glimpse at what that picture looks like. But before I flip it over to Brian and we talk about the headlines and jump into the charts, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. All right, Brian, I'm going to flip it over to you, and let's, because I know you're going to want to talk about
Sure.
Bostic's comments, because I know he spoke, and
Yeah,
I'm
I'm still
still
confused.
scratching my head.
Yeah, I don't know. Coming into a Monday morning, there wasn't really much news over this weekend. There's no major headlines. Russia and Ukraine is still happening, but not really hearing much about it. We got something 4 hours ago. Russian negotiator says peace talks with Ukraine have not stopped. They're just doing it remotely now. Nothing really. Not too much there. We heard about a bomb this weekend, and again, there's many bombs that are flying back and forth, and people are losing lives. So really not much on that front. China had some comments as well about not resorting to flood-like stimulus. Their export growth has slowed to a level it was 2 years ago. In imports completely flat, which we knew we were seeing that. And again, a lot of this has to do with the lockdowns that they're having. Not many updates. Again, Beijing not locked down yet, and again, the first lockdown is probably at the range now where we're going to start seeing potentially lifts. We'll see. We haven't heard much more about kind of how that's working. And again, China doesn't tend to be too transparent about it. Now, the comments about from Bostic, they started coming out about 28 minutes ago.
Yeah.
Yeah, there's many of them. 50 basis points is a pretty aggressive move. The Fed can stay at that pace. This is what doesn't make sense. He says by the end of 2023, so a year and a half from now, I think Fed needs to be somewhere in the neutral range, defined by 2 to 2.5%. So what's weird about that one is we're at 1% now, which means are we not going to continue to raise
Are we going to
interest rates this
skip, or is
year?
it going to drop down to 25 basis point
Yeah,
move?
I mean, it's all everybody's
The
about
math
50
doesn't
because
add up.
that's yeah,
Yeah.
everybody's about 50 because that's the hot button of the week. Where was the other one? But I mean, his comments are, hey, it's way too high. The Fed needs to act purposely. It's like you could have done that months ago, 6 months ago, but you were stuck on it's transitory. Like I'm not exactly
But
sure. And like I don't
moving,
see the need to hike it past larger than 50. And he says, which some of them have said that they think more than that would be too much of a shock. But look, going forward, two, maybe three times, and we'll see how the economy responds. But if he goes two times, he's already up at 2%. Three
to,
times is
yeah.
2.5. That's not the end of 2023. Like a year and a half of continued inflation, that's going to be rough. But it's funny. We don't need no more than 50, but all options are on the table. Okay. And we're opening the tightening into a restricted territory if needed. So I don't know. I don't know. Really have no idea where he's coming from. Like I said, he makes some really, really strange comments. He was like, he was the guy last year that we got excited in September when he said, we need to start aggressively, handling this problem. And then
Yeah.
like 2 weeks later, it was like he was told, "Don't say that." And he was like, "We need to be mindful in what we say." It was like, huh? It was like a quick turnaround, right?
We need, yeah,
So
even this statement itself, inflation's too high, we need to act purposefully by the end of 2023 to get to
right,
2%. Like, wait a
right,
minute. We know you're going to have to overshoot a little bit in order to bring you got to bring the rates, you got to bring inflation back into line, and to bring it down from 6 or 8%. I mean, the goal, I mean, we're way overshot.
yeah.
I think he doesn't
Advanced thing
understand that
overlooking.
the Fed funds rate and inflation are two different numbers.
Yeah. So we'll see. I mean, as you mentioned, later this week, on Wednesday, we start getting some of the data in there. And, the CPI and the core is expected to be, it's still positive. It's expected to be lower than what it was before. But, again, still positive, meaning it's still growing. So, I mean, they did the point 0.5. And remember last time, the core number, they were like, oh, look, the core number was less. And Bernard was, thumping her chest about how great it was. That, look, what we did is working. But now it's supposed to be going up, which, again, she was all about high-fiving everybody about how what they did worked, and now it's the forecast is that it's gonna be higher than it was last time after the 50 basis point rate cut.
So
So,
we'll see. Yeah, Wednesday will be an interesting day. Wednesday will be
yeah,
an interesting day.
Wednesday and Thursday too, because we
Yeah,
have PPI coming the next
PPI
day.
too.
And again, it's lower, which lower is fine. You're gonna have those, and again, we are starting to roll into summer, and again, there are cycles that kind of come through, but again, we haven't even. I don't even think with China sending exports going down. Again, that's also affecting supply. So again, there's a lot of. I would say there's a lot of kindling on the fire to make this get really really crazy with inflation worse. And I don't know. They seem like they are happy with what's going on. I don't know. Like I said, I told you and I told everybody else. We used to grab this apple juice at the supermarket that was 99 cents, and it's over $2 now. Um, and that's real inflation. That's not a number. That's like, hey, listen, we used to spend 99 cents, and now it's double the price, over double
Yeah,
the price for the same thing.
yeah.
Meat, everything is double the price, and remember that's food prices is one of those things they can say, oh, inflation is fine. It's only gas and food. But if you think about what are the biggest
No,
drainers and what do you see on a regular basis, it's
food is, yeah.
yeah, yeah.
So,
I mean,
yeah,
people need to eat, right? People need to eat. We got food shortages, and they put gas in their cars. Do I care that like a pencil that I buy is not higher, or band-aids are not higher? Not as much, right? Because I don't use those on a regular basis, but I eat every day, and I pretty much drive my car every day. So those are big things. As far
yeah.
as the markets are going, this is not bonds, guys. We need to bring it up because it's kind of crazy, but this is not bonds. This is actually Bitcoin. Um,
Bitcoin.
Bitcoin. I
Yeah.
mean, we last week for the FOMC, actually 2 weeks ago now. All right, last week FOMC we hit 40,000, and it was kind of like, yeah, there we go, and it was a major psychological number, and now it just collapsed, and we're below 33,000. Um, and Ethereum's even worse. Dogecoin as well, down to 1177. So all these that we're going to take over, it's kind of crazy. And you think, well, where are they putting it? Are they going in risk assets? All the commodities again. It's not low, but it is low on compared to the recent peaks. We have
Relative. Yeah.
oil down at 107.30 again. And again, it's bad when we're on the bottom of the chart and it's down at 107. And again, it just pulled back. There was no major news. Last week it was all about we're going to ban, we're going to ban, we're going to ban. We haven't heard anything right now, so they're like, oh, you're not. Maybe they're not going to ban. But again, U.S. session tends to be a place where we rally. We're flirting with the 23.6, so it's a level we need to kind of watch out for. We don't need this anymore. Actually, I don't need this anymore either. So, I would say the next big level, I would say 80, 108.50. 180. 108.50 is kind of snuck right in there.
If we're
Kind
at
of
180, I tell you something, that'll be the day.
transitory. It's transitory time. Don't worry about it.
Yikes.
Yeah, so I would say 108.50 again, psychological because it's a half number. It's right near the 50% retracement level as well. If we rally up, that could be a reversal point for today. But I think although it's down big right now, we tend to see more of a rally in the U.S. session. And really, the Europeans sent it down at about 7:30, 8 o'clock when the futures traders were coming online. That's where we started to see the profit taking coming back. So that has the potential to move. Natural gas, also kind of a weird, kind of we like gap down, then we kind of went back up again, and I don't even have fibs on it right now. And it kind of came just the middle area. A lot of choppiness back and forth as well. Remember, they're like, oh no, we're just going to cut gas off. We're just, we're not going to do it. Did have a very cold weekend. I know in Maryland it was, 40s and rain, and it was just nasty. I actually did turn the heater back on because it just got a
And
little bit too
meanwhile,
cold.
In Chicago, we actually saw the sun on Saturday. It had been a month and a half.
Yeah. So we are rolling again. This seasonally, they should be coming down, and with a lack of any headlines about cutting pipelines off or switches or reversing it or vacuum cleaning it, sucking it out of Germany, again, it should be coming back down again. Now it is down 3%. Um, and again, the money numbers are always a little bit weird. I mean, it's down just a little bit. I mean, it's down 10 cents from where it was. I would say that that's, you know, not quite not quite this much, but I would also say look for somewhat of a bottom. We've seen another area kind of coming in down here. We're kind of bouncing off that right now. Again, U.S. session, this tends to rally up a little bit more. Gold also in a sell. Last week we talked about it kind of popping up and then dropping. It popped. It just didn't pop that much and then collapsed down again. So we kind of missed the draw by a little bit, but again, the end result was it pushing all the way back down again. And we actually talked about a profit target down here, and we literally we smashed through it and we just bounced it and then continued to push lower. So um, again, with what we're seeing in the markets, it's kind of risk off. Everything's going to the dollar. Again, that's every reason for gold. Silver, we also talked about being under 22. I missed it. I was like, I wanted it last week, and it tried really, really hard. And it got to 22.25, and then I got rewarded. It finally broke through. 6 o'clock this morning, we broke through 22 and got all the way down to 22.67. So, again, as silver continues to collapse, again, commodities are not there. Bonds, kind of the same thing. Bonds also continuing to
Everything
gap
is
lower
being
again.
sold. Yeah.
It's and everything. VIX is up a 10%, 11%. So again, it did gap over the weekend. We didn't hear too much. It is starting to pull back now, so that may help a little bit. But everything is solely in the red. ES is again down. We got some buys on Friday. If you were here Friday, we talked about getting potential buys at the open. I mean, 9:30 we got a nice pop, and then it kind of rolled. And over the weekend, it obviously rolled down again. We kind of got like a little bit of a Harry Potter right now. Again, the question is, it's pulled up from 7:30 on. Is that the trap for retail traders saying, "Oh, you know what?
It's
Everything's
safe.
in the red. Yeah, it's
Oh,
safe now,
oh.
right?" Yeah, so that could be there. NQ also continuing to drive down. We'd actually pulled this level all the way down to see if we could try to forecast an area with the fibs. It's still moving that direction. Again, it's down 1.95%. Does it mean it's going to end red today? Not necessarily, but again, starting off the day down 2%, that's a lot of movement to go to the top side. But it definitely could do it. And again, if we do get back up there, I'd say watch out for that 12,878. And if we're able to break through 12,977 today, which it'd be a big push, this could be maybe something for tomorrow. If CPI is low, we may be looking for this later in the week, this zone here, because we do have a
Yeah.
to the top side. But we had projected 12,208, and it's kind of pushing that way. YM. Again, Friday we did have it open. We talked about it pulling down to 32,464. It did hit it and pop. Now we're kind of basing around that same level, and it's kind of figure out, all right, are we going high? Are we going low? This one I will say that we do have a Globex kind of trap set up here and here. And again, futures traders may say, hey, listen, let's see what the open looks like, and we'll take this with our higher low based off of that. So, whenever you see a pullback and it's kind of in the middle of the Globex highs and lows, that is more or less a trap for the YM and actually all the indices. It's kind of set right there. And then even NQ or Russell, we talked about 1800 being a big level, a big psychological level. We had it as a target. Well, that target just got cranked. We just hit it 7 o'clock this morning, and actually we can run this down, and you can see we're actually the 23.6. So if Russell turns and rolls, you'll know why. It was the last Friday high to low. And we have a 23.6 with a little bit of a level there. It's not the best level, but a little bit of a level right there. To punch back down. So we'll see. I think the 1800 level to 1790, if it comes down in bases, it could be the opportunity to kind of take the short again. But as you can see, this one is down, and I'll remove this just so we can kind of get a little bit better review. There is a gap sitting right there, and we kind of have been front run once from it. So if we are able to rally back up again, I think 1828 is a level that there are potential reversals. Maybe at 1030, if we rally up from the open, everyone's like, yeah, everything looks great. By the way, here's the Globex high.
Yep.
There. So
Cool.
Globex highs and lows and the Russell, same thing. It's a trap, it's a gap, and it's an area of sellers. So again, Russell at 1828. So that's kind of it for today. So,
yeah, it is a quiet. I mean, everything's being sold. Everything's it is quiet for a Monday, but there is some volatility in the markets. I think it'll be interesting to see what happens when Wednesday comes around and we start getting some real glimpses at where some new fresh measurements on on inflation. With that, any questions for Nadex, please email us, customerservice@nadex.com. You can also email Brian or me. Brian's email address is support@keeptradingsimple.com. Mine is todd.rich@nadex.com. That's what we got for a Monday. Thank you so much for joining us. Again, everything's sort of across the board. Equities being sold off going into the open. We've got commodities even being sold. We got bonds being sold. We got crypto being sold. It's people going to cash, which is strange when you've got such high inflation. But again, it's just a risk off until people get our next inflation measure and the next headline hits on what's going on with the economy. We will catch you again tomorrow morning. Thank you so much for joining. And until then, good luck in the markets, everyone.